All right, we're going to get to some innovation updates, especially in Will's offer to stick around with us. So it's going to be fun. Matt and Will breaking down the business of the week. But just a quick note on our on-demand material. So a lot of people love the webcast that we do, much more conversational. I think Paul does a fantastic job hosting all that type of stuff. And we're transitioning to also having some stuff available to you on demand. So you can get some of our previously recorded stuff right now if you go to securityweekly.com/on-demand, and the new content that we're working on that I think you're going to love. So right now you can get Cyber Reason, Black Hills, Onapsis, Signal Sciences, and Stealth Bits with more coming soon. So if you like getting that type of content, go check that out right now. All right, so here's the idea, and we're playing with what we're calling these. Now I'm looking at like innovation updates and stuff like that, because I didn't just want to talk about startups. What we're talking about here are things that are happening in the security industry. But of course, we're talking about startups, we're talking about exits, we're talking about raises and expansions and mergers and acquisitions and pretty much anything in this industry that as a security leader you want to pay attention to. But frankly, I think most of us keeping our pulse on the things that are happening, this is our chance. So in the news this week, some interesting stuff, some names that I hadn't really come across before, and there's not really a good order to it. So let's just kind of take these as we come to them, and always curious what Matt and Will both think on these. So a company comes across Apptio. They raised $4.6 million in equity. Now, I'll tell you, typically, right, we just talked about equity rounds, not always bad. And so that's kind of interesting. So I go, all right, $4.6 million in equity. That's interesting. So I go look them up, and they IPO'd in 2016. They raised about $96 million in their IPO, so it's not the unicorn status, but it's not bad. And I thought that was really just kind of interesting to me. And frankly, the reason I threw them in is because they try to help make business-aligned decisions and communicate IT value. And I went, well, hey, I like that. So it plays to a bias. And the only thing I could find in this was that they just did an acquisition. But I'm not used to seeing somebody do such a small equity raise within a year or two post-IPO to then fuel an acquisition. So, Matt, Will, I mean, when you guys look at this, just based on what we've laid out, is there something to think about, or just sometimes companies raise money?
I was going to wait for Will to go because it's odd to me. So I was just curious on the VC side of the house.
You found an odd one. You found a really, really weird one. So
do you ever find though, like somebody says like, hey, Will, I really like your company. And I want some ownership, sell me some stake of it. I mean, would we call that equity, or would we report that just because of the size of it? Like, I really love where you're going as a business here. I want to invest $4 million.
So I think, and I don't have as much detail on Apptio because they're not exactly a security investment, and I'm a security-focused investor. But my guess, and this is a former investment banker as well, is that they raised the equity round, the IPO, in some weird way. And either it was, maybe it wasn't even in the US. Did it say the exchange by chance? Like, I know Australia is actually pretty popular for startups to actually raise a public round. And you can raise like a 20, 30, $50 million round as if you're raising venture capital in the US. So that could
it does say it's on NASDAQ.
It's on NASDAQ. Okay. All right. So it's a US based thing. Then the next guess is probably that they prefer to raise more equity versus buy more debt in order to fund the acquisition. And so there was probably a unique investor that was around the hoop saying, hey, if you ever get the opportunity for me to put in a big chunk, not just buy shares one at a time, but put in multi-million dollars, let me know. And they said, well, I want to buy this company and I don't want to raise more debt. And why don't I just give you $5 million equity instead? And they said, okay, sure, here you go. And they went and used that to buy a company. So that's possible. It happens a lot in private equity. So for instance, if you're a big private equity firm and you own a platform, let's say, for instance, McAfee. McAfee might not have the cash to buy everything that it wants. But McAfee says, hey, it's going to be inherently more valuable. Our company will be inherently more valuable if we buy this company. In this case, TPG is the PE firm. TPG, would you give us more money? And I'll go buy this company. And TPG will say, yeah, the combined company will be worth way more. Of course, here is $50 million. Here's $100 million. So it is more common to see that in the private equity world.
I got it. And you know what?
But not in this scenario, which is kind of a IPO equity play. So that one was kind of odd. But if you're pure private equity, this would make sense.
All I was going to say is I just dug into the SEC filings, which I don't always find, but this one I was able to pull up really quick. And all it says is that it was a sale related to business combination or acquisition, therefore equity. So it looks like it was equity in terms of shares. It was weird the way the whole thing was reported. And to your point, Will, not exactly a security play. I like the business value. And it turns out to be a pretty instructive lesson for us. Let's get to the security stuff. So Vectra. $36 million Series A. So they're at about $122 million, 5 rounds. Their last round, so this will be interesting. $25 million Series C was July 2014, so 3.5 years ago. But they did a $43.8 million equity round in September of 2015. And Vectra is an AI-based cybersecurity platform, automated threat management solutions. The only thing I can find, by the way, is that with this latest round, their plan is to expand in Europe and grow the channel. And it was we got some investment from Ireland, and we're going to create 100 jobs. So that part felt kind of like most political stuff. So what do you make out of that funding round, guys? That series?
Well, it was a D, not an A. You said A by accident. But
sorry.
Yes,
that'd be a hell of an
5
A.
rounds,
yeah,
122 million in. So I remember seeing the Vectra guys for the past few years. They were originally a hardware-based network appliance that was doing some network collection and AI stuff. I don't know if they're still heavily hardware-based. They could be, and that could be part of where some of the previous burns came from, because the hardware side gets a little heavier with your cost structures. I just don't know where they go from here now. There's a lot of money in this company now, and they've been around for a while. So I'm curious what the VC thinks about what happens next for somebody like this.
Yeah, so being a VC, I'm also very careful to not talk about make predictions of companies that aren't mine. Yeah. And so, and I've also met Hitesh as well, the CEO there, and I think he's a great guy. Sorry, can you guys still see me? I just got a phone call on my phone. I need to. Oh my God.
Yep.
Can you still see me? Okay, you can still see me. All right. The danger of using your phone as your camera as well. So anyway, one big thing that they led on in the press release is that the company grew, I think, 181% in the press from 2016 to 2017. And so what I saw when I saw that press release is it was a momentum press release, right? They want everyone to know, hey, we're growing, we're going to get more of a leader in our space. And on top of that, we were able to attract capital from the venture capitalists. And then, Ireland, Dublin. Dublin's actually a really big place for security. We have.
I'm noticing that, yeah.
Yeah. And so Ireland is definitely spending more and more time trying to figure out how do we pull more security companies into Dublin and to build on that ecosystem. And so what this looked like to me was it seemed taking more than 2 years since our last round is very impressive. But weighing that against the $40 million-ish number from more than 2 years ago. And then, what I saw here is they wanted more runway to continue to grow, prove success, and maybe one day be IPO candidate, or maybe one day be acquired by a startup, acquired.
And so the fact then that they took such a large equity round right after their C, to your point, Matt, may mean they needed to work out some hardware stuff, or there was some sort of capital infusion that they needed. But Will, what you're saying is, but guys, that was 2015. We're into 2018 now, so that was 2.5 years ago. They've done well. This is a $36 million in a Series D, so they should be looking at growth. And what we see from that announcement is, by the way, we have been growing, and now we're going to expand in Europe. We are a channel-friendly company, and we're going to go through the channel. So it all lines up. Even though if we were to look at the history, we go, that's interesting. But because we're on the other side of it, that's interesting. And from what we can tell, looks like they've done a decent job navigating through it.
Yeah, I think high level, the summary is this is giving them more runway to show success. Another high level summary I would say is right now, it's a really good time to be an acquirer right now, because there's so many companies, and I'm not saying specifically Vectra, but there's so many companies that could never be an IPO candidate, and they have to get acquired in order for everyone to make money. And so it's a really good time to be acquired right now because you have all these startups and you can basically pick and choose
It's a buyer's market.
where you want to go. It's a buyer's market. It's a buyer's market.
All right,
Yeah,
Morphisec.
and the next one is a perfect example of that scenario, right? Because this is an endpoint play.
Yeah, that's what I noticed. Yeah, Morphisec, $12 million Series B. And if you go read it, cybersecurity prevention detection tools, $19 million 2 rounds. It was a $7 million Series A. So so Will, that's in the range of what we would expect for a Series A. That was October 2015. So that was about it was 2.5 years ago ish. I got to tell you, I looked at their announcement and I went, wow, there's not a lot of detail, a lot of hype. We're the leader, we're the best. But Matt, I did see the word endpoint. And this endpoint space is crowded, and we've got a lot of unicorns and a lot of $100 million investments into the endpoint space. So what does that mean for a company like Morphisec?
Yeah, the first thing I noticed was, this is what company 88, 89, 90. I don't know. I mean, there's so many in the endpoint space on the detection response prevention side. You talk about a buyer's market. Here's a perfect buyer's market. There's, a lot of endpoint guys sitting behind the big four, right? Carbon Black and CrowdStrike and Cylance and Tanium, right? How do these guys continue to, where they go? Everybody's stuck behind those big four.
Does that start to make endpoint then? And Will, I know you spent a lot of time looking at this. I mean, right now we say endpoint is a thing, but there was a time where UBA was a thing and UBA is now a feature. Does endpoint then, because the market is so big and these acquirers have that ability to go, oh, look, I can do endpoint too. By the way, so can everybody. Does that start to diminish that? Like, is that a risk even for the 4 leaders that other people now can develop endpoint technology as me too? Or no?
So the key thing with endpoint is that usually it's agent based, and because there's an agent involved, it's really hard to pull it out and it's really hard to install it. And so the big reason why you as a customer would buy a new endpoint product is because there's something you don't like about your current solution, and you're willing to put through several months of effort to get that new agent installed on all these endpoints. So with that context in mind, there is a barrier to entry, and so it's really hard to be a really young startup and try to penetrate that space because there's already too much crowding on the endpoint in terms of number of agents. And so with that in mind, most of these endpoint companies behind the big four, and I'd say they're not even big four, it's probably big six. There's a lot of billion-dollar companies on endpoint. All those are basically features, and their end goal has to be figure out, hey, how can I find an endpoint or an agent that's already on an endpoint, and how can I add my feature to that agent?
Okay.
And so they all have to be acquired. That's the end goal for most of these nowadays.
And that means some of them won't be, right? So it's gonna be interesting to see how that works itself out. All right, so let's go hardware based. Dover Microsystems, $6 million seed round. So I knew to put that in quotes before we even talked to you, Will. They're a cybersecurity company. They develop a hardware-based security solution, hardware-based. So they're looking at hardware-based embedded systems, which thankfully they didn't call IoT, which is kind of nice because everybody else calls embedded systems IoT these days. And what I saw, if I went into one of the articles about it, they plan to use the funds to expand engineering, product development efforts, and support key hires across marketing and sales. I've been to their website. I think hiring marketing is a good strategy. Maybe they could consult with Matt and do a little better with it. But so $6 million seed round hardware-based company. Thoughts, guys?
Hardware.
Yeah, this is not my space.
It's not. It's a very hefty seed round. But generally, with a hardware company, they usually have to raise more money because building hardware is just generally more expensive nowadays than building software. And so, on one hand, it's a lot. On the other hand, it's a hardware company. But the big nuance with a hardware company versus a software company is that if it's successful, it's insanely successful. If it's not successful, it's the range between success and not success in hardware is pretty huge. While in software, it's a lot, not easy. I'm never going to say investing is easy, but it's more common to get your money back. While on hardware, it's very common to just lose it forever.
Okay, that makes sense. Yeah. Plus, I guess when you look at the prototyping and really getting it down and figuring it out, it is going to cost a little bit more. So this then, because their hardware could still be a seed round, even though it's got a larger dollar attached to it. All right, new company comes out this week, Temblar Bit, $3 million. So they raised $3 million. It's an equity raise. And these guys, the two guys, they were at Synac. They come out of Y Combinator. And, I tried taking a look at it. I think they need to hone their message a little bit. So they're trying to be a different, try to replace the WAF, but not really sure how yet. $3 million in equity. Is that because they came out of Y Combinator, or is that a way that people start now? I mean, that seems like a pretty big jump out of the gate.
Yeah, I would call that a Series C. I'd call that a seed round. It's more typical. It's pretty common for, especially a B2B company out of Y Combinator, to raise around that amount. I think that I consider that a success for them. There are some companies, but it goes across the range, right? There's some that come out of Y Combinator and raise like $25 million for the next round based off of, and there's some that raise none, or some that raise less than $1 million. I would say 3 is I'd say a successful outcome for those guys in terms of the ability to take the next steps, right? Like, there's one nuance I want to add here, is that just raising a round doesn't mean success. Raising a round means someone trusted you enough to give you runway to try to move towards success. Success is really only measured by the exit, right? Once you start giving people their money back, that's what success is called.
I like that. I like that a lot. All right, last one of the week, and I think I already said, at first I saw this, I thought, okay, that's interesting. And then as I've been thinking about it all week, I was like, oh, that's actually really interesting when you start to dig into it. So Signal, Moxie Marlinspike started Signal a couple years ago, and it got used by WhatsApp, which then eventually got folded into Messenger at Facebook. There's one or two other things it was used by as well. I know a lot of us have used it. Frankly, I went Wicker instead of Signal, but now I'm going to go take another look at Signal. It was Open Whisper Systems, and I actually hadn't really paid attention to it, but it's essentially volunteer driven, not a ton of money. People kind of doing it as more of a passion project. So the Brian Acton of WhatsApp said, "Hey, this was fundamental to us. I'm done with Facebook now. I'll tell you what, let's launch it as a nonprofit foundation, and I'll put $50 million into it." And I'm looking at that saying, this feels like it's an important topic. And I thought that was a neat way to do it. And $50 million is a pretty good way to get your foundation started, especially given everything that they've done essentially volunteer wise. How do you guys look at this? Is this an exciting thing? Does this let us start to see more interesting things happen in the marketplace that then can fuel the growth of other things? Or kind of a one-off, neat, good job, everybody, feel good, Michael, it's Friday, go home and relax?
Well, from a technology perspective, I mean, this is an interesting space a little bit, right? I mean, we've seen lots of issues around communications and social media and some of the other things. Do they put this foundation money to work to come up with some innovative ways and protect more on the consumer side as we see some of the stuff going? I'm a Wicker user as well, when I need to make sure those communications are secure. So I think there's some potential good that putting money into a foundation like this could spur. I'll wait to see what it does.
Yeah, I mean, I think this is, for me, what it represents is just, some people are realizing the issues around privacy, and the pendulum swings back and forth, right? And what I see is a gradual swing back towards more and more privacy nowadays. And there are certainly going to be people who have more context, who have more passion about that problem. So I see it as a good thing, because he has context and he's passionate about the problem. So, and he's putting money behind it. I find that people who are in venture and entrepreneurs, they love to create value, like they like to shape the world and change it. And this is a good way of putting your money where your mouth is. Or how do you phrase it? How do you phrase it, Michael? Money.
Yeah, put your money where your mouth is. I mean, I liked it. Like I can see a cynic right now looking at this and saying, "Oh yeah, so he made $1 billion and he gave him 50 million." Yeah, that point, that doesn't matter to me so much. It's that you kind of came back and said, "Hey, you helped me. This is really good. This is important to us." And what I'm also unpacking, looking at from the innovation side, was so Moxie and the team built this and then went to WhatsApp and said, "Here, you should use this. This stuff is important." And it's whether you use WhatsApp or not, whether you use any of these type of things, there are a series of technologies that are pervasive. And I think, as you guys said, this is an interesting topic in our industry. I always think it's interesting because it's not always about competition, but sometimes good things happen. I don't know. I think it's interesting. And Matt, I think you said it well. Let's see what happens as a result of it. Let's see if this lets them create anything different or advance it or otherwise help us. It does mean it's funny though, because I've been enjoying the Wicker experience. I'll take a look at Signal again and see, what that looks like, and I'll keep my eyes on it. So, guys, it's been a blast having both of you here. Will, I'm so glad that you came back and you got a chance to join us. Obviously, we're going to have you back now. I think we did a good job today of answering a lot of questions people have around what do these rounds mean and stuff. And it was great having you with us to kind of co-pilot what Matt and I try to pick our way through when we do this. So let's look to have you back in a couple weeks, and I'll coordinate with both of you. And let's get into, Matt, because one of the things we talked about before is like, what's that relationship look like? And so, Matt, you've got a lot of experience on that startup side and helping companies, and you're working through some of that process now. So it'd be great to talk about what that looks like and what that relationship looks like. And then let's in that perspective of, so as an enterprise leader watching this, who's maybe not even interested in doing a startup, but might want to work with startups because of the innovation, because they're solving a problem that we have. How do we capture that? So like I said it before, if you got questions around that, shoot them in and figure sometime in the next month or two, we'll come back and we're going to keep this going. We're going to take a short break right here, which is a good chance. Go like our page because we like our likes. Go to facebook.com/securityweekly. Give us a big thumbs up. But actually, that's how you're going to stay informed of our live broadcasts. You can engage with us. You can engage with your peers. When we come back, the second part of our awesome interview with Sean D'Souza.